Hi guys, quick update here for the SP 500 technical analysis Tuesday 12th of July. So ultimately we are still bearish on this market. We are looking at this as a secular bear market. I don't feel there's anything cyclical going on here. The only bullish count left is an ending diagonal. Obviously every real estate investor from here to Timbuktu would convince you this is going on. As always, you just do the opposite, okay? It's a secular bear market, and on the Nasdaq is very, very clear. Super cycle, large ABC correction, possibly lasting 2 to 5 years. Nasdaq may very well hit 50k within 10 to 15 years. But a lot of these Nasdaq stocks, they don't look very good. Whilst we've got the Nasdaq up here, I mean, it's only really because of Apple and Microsoft, which are more value stocks rather than growth stocks. That's the only reason the S&P hasn't fallen much further. But it's early in the day, the week, the month, and as it turns out, the quarter, and potentially the year. There could still be things happening here to the downside. In a US midterm election year, we understand the fourth quarter is very bullish, and we have been talking about this in the group for the last 6 months. So we've always known the first 3 quarters are a little bit iffy / sideways / down, and the fourth quarter is when everything kicks off. But I don't think the fourth quarter is going to take the Nasdaq to the all-time high. The highs are definitely in, multi-year highs for the SPX, Nasdaq, and Bitcoin, and many of the altcoins. It's all about finding this low. 2 interpretations. One is a straight move down, and then it's an ABC, or it's a more of a, complex combination WXY. Either way, Nasdaq will effectively be range bound between 7 to 8k to 16k over the next 2 to 5 years. It's very, very clear this is secular and not cyclical. Okay, markets go up 84% of the time, but guess what? They go down 16% of the time. So the only reason this doesn't feel like 2008, because it's inflationary and real estate is a commodity, and so because of that, real estate prices are continuing to be propped up. But like I said, it's early in the day. This looks awfully bullish, right? How do you make everyone lose all their money? You crash the market over 2 years rather than 1 year. If you crash this market 50% over 1 year, people will lose half their money. Crash this market 50% over 2 years, people lose all of their money. Same with the altcoins, same with the Nasdaq. It's very, very similar. It's not just what Jerry Maguire was showing everyone here with their money back in 2020. Technically, there's been free monopoly money the last 13 years. That amount of money doesn't just magically leave the financial system. It doesn't work like that. It takes time for that money to slowly peter out. This could get a lot worse. Worst case scenario, this is part of a huge A leg down, counterweight B leg, Q1, Q2, 23. The entire, wheels come off the entire financial system. This is going to go to 1260. The only reason it's still up here is because of Apple and Microsoft. Ultimately, stocks are the most leading indicator to the stock market and thus corporate earnings and thus the economy. That's how it works. Altcoins lead Bitcoin, Nasdaq stocks, corporate earnings, the economy. This has to go to 200. Mathematical certainty. It might, go sideways here a little bit because of earnings form the full right shoulder off the head and shoulders. It doesn't matter. Most people will never see this high ever again in their life. That's 100% certainty. We call the top in Nvidia. Has it gone to 100 yet? See, it's at 150, still more downside there. Twitter could easily make all-time lows, easily. It has to go in this blue box. That's a, certainty. It just has to. People have to be able to, and it's not even about taking a masterclass, really, although you can take one if you wanted to. Many people have took the course, and it has provided to be very, very useful. But people have to be able to look at a chart and just call it as it is without anything on a chart. Where is this chart really going? That is absolute basic premise knowledge needed with any chart. You have to be able to open up any chart and immediately be able to tell anyone, where is this going? I don't even need to do any work on this chart to know it's going to end up in the first quartile of this entire move. So first quartile, I've just halved it there, halved it again. So that's taken me 2 minutes. So, that has to happen. Worst case scenario, it has to go into here. Worst case scenario, it runs these lows, deviates, you buy the support, And then, we could do this. So there's still more downside to go. Apple and Microsoft, I mean, it's absolutely incredible how they are keeping this propped up. What are the chances of Apple making a new high here? I just don't see it personally. To me, there's a lot of damage there. That actually looks really bullish here on the monthly chart, but everything looks bullish, like Mike Tyson said, till they get punched in the face. Everything looks really bullish. It's just another lower high, isn't it? Just an ABC flat pattern, probably into earnings. Next thing you know, it's going back down again. Facebook, we have covered. Nvidia, AMD. Everything's going down. So it's very hard to get long-term bullish on this market. Ultimately, passive investors here, they don't have a chance. Now, what is the chicken? What is the egg? Interest rates or inflation? That's probably a debate for another day. So I'm not going to waste my time with that debate here. Ultimately, we're still looking at this to go higher to around 3%, 3.5%. Inflation, back in 1970, it did have two peaks to inflation. First peak, second peak. Are we now going into the first peak? I've done Elliott wave on this 6 months ago, and I told the group inflation will still get between 12 to 14%. Under no circumstances do I feel like we've peaked. What I'm not sure of is, do we get a 1-2 peak like here, followed by a crash, then back up again, or do we just go straight to 12 to 14? If you were to look at oil prices and perhaps the dollar now falling off from the obvious parity move, which we called, once again, months ago, 6 months over up to a year ago. That's a 16% move in the third most liquid currency. Why is the euro moving like an altcoin? Things are happening here that have never happened before. Anyway, you could take it to mean that actually inflation might settle down somewhat, form its first peak, just like it did here, then we reverse and go higher. Ultimately, I don't think the entire inflation trend is over. There's still higher to go here. So higher interest rates, higher inflation. And obviously bonds, bonds are very, very bad in this environment. Ultimately, we have mentioned this line breaking, and that was a real significance. The dollar's very close to doing very similar things. Sure, short term here, we might be back testing here, this line. Ultimately, it's very hard to get bullish on yields. Going into the end of this year, we might consolidate 2023. This could easily get above 5, 6, 7, 8% here. There's a great level all the way up here. That's at 7%. So it's very hard, and that's just the US market. What of every other bond market going? It's very, very hard. Euros at parity, we mentioned this in our Bitcoin video. There's no need to overplay your hand here. For what it's worth, I'm not expecting a big dollar crash, but given this amount of move, that is a 1 year move near vertical in the US dollar. It has to correct. So we could very well have formed the top, the entire calendar year top in the dollar here short term. The entire next 6 months might just be a consolidation. Well, as we know, effect is proportional to cause. So what's going to happen Q1, Q2, 23? We're going to go higher again. This could still go to 130. So ultimately, looking at everything is very hard to get overly bullish on this stock market. Like I said, the worst case scenario, 1260. Now, what is the best case scenario? Well, ultimately, if this trend continues down, we could just follow it all the way down to 2850. That is consistent with the average decline of a bear market in terms of price and time is 40% over 1 year. Then we flag, and then we go into a more complex correction, much like the 1970s. We've mentioned this in the group about 6 months ago. There is a possibility we are following the 1960s fractal for many, many reasons. But the question is, how deep do we go? I don't think anyone cares that we're following this. But, how far do you go? It's no good just saying we're following the 1960s. That doesn't really help anyone. How deep is this going to go? Is it going to be like this? Or is it going to be like this, right? Because I'm saying 1260 is a worst case scenario. So is it going to be something like this? So, when you follow fractals from previous bull and bear markets, understand markets don't repeat themselves, but they rhyme, and we get it. There was an oil crisis then, there were high interest rates, there were high inflation and high yields. It's almost exactly the same as we have now. The question is, how do you place this fractal then? If you want to follow that exact fractal, where are we going? Because I would argue it's not exactly like 1970. There's some hallmarks here which are like 1999 bubble popping. Here, there's something like 1929. There's a bit of 2008. There's always something of 2008. There's also something to the 1940s, which is all the way down here, which you can't really get off the S&P, obviously, but you can get it from the Dow Jones. So then it comes down to how bearish you want to be, right? We have been calling for a grand super cycle crash on the Dow Jones for many, many years, right? So we've called this about 5 years ago on the YouTube channel, right? When all of this, I mean, some people would argue that's a grand super cycle 3. I'm not of that opinion, by the way, because that means the Dow's going to go to about 6. You know, to me, that's a grand super cycle 1, 2, and then that's the third in. So because that's the third in, markets have to now correct in terms of price and time. If you argue that's a 1 in to hit, like I said, some people have this as the third, by the way, right? You know, in that case, it's a sub-millennium scale crash. I don't think that's happening right now. You know, this was quick and, you know, deep, basically, right? Like a typical wave 2 ABC. So it would make sense for this wave 4 to be more sideways in nature, which is where the whole 1970s thing comes in, right? It makes sense for it to be like that. This would frustrate a lot of people. The passive investors who are getting no upside traction and the shorts who are looking for downside, end of the world type scenarios, but they're not getting it. Either way, it depends how deep you want to go in this fractal, because yes, there is a count I have, like I said, 2850, maybe 2250. We never take out the pandemic lows. We just consolidate here. Then how deep do you want to get, right? If it's a worst case scenario, this could still go lower to, let's say, 1260. Obviously, I'm on the Dow Jones here, and then we could then go sideways a little bit, then eventually go to, let's say, 100,000 on the Dow in the next 50 years or so. So some interesting things here as regards to how you want to call this. The point I want to make, though, is you have to say that the 5 is in, though, right? The 5 is very clearly in. You cannot, I don't think you can now, you can no longer call this an ending diagonal, and that's the 5. You have to say that the 5 is in. You have to, yes. I was looking for 40,000 Dow. When the Dow was here, I was calling for 40,000 Dow. Had the t-shirts and everything. But it's not my fault. They've taken it to 1823. I was quite surprised. Had they taken it to 20k, as per my calculations, we would have hit 40k. Because they went deeper, the Dow topped sooner. So long term, there's some very interesting situation here, fourth turning and all of that, depending on how bearish you want to get. And whilst I do feel it is like the 1970s, that doesn't really help anyone, I don't think, because we have to have price targets, really. So anyway, those are just my thoughts. I think there's a few interpretations. So there's no bullish interpretation. One interpretation is it's a full-blown 1, 2, 3 as part of an A, then it's a B. Q1, Q2 next year, we completely roll off it. Second interpretation, which actually follows the first one that I've just shown, we continue to trend sideways here. One more push down before Labor Day. Quick little bounce up here. Labor Day, US midterms, break this trend line, 4K, trap every long-term investor on the planet because the S&P is above 4K, then we roll over. And then another interpretation, we continue this move down, okay? This leg, I appreciate, is getting quite exhausted to the downside. And if anything, it's looking like a wedge. Okay? Okay, that's pretty obvious there, right? It's definitely looking like a wedge. It's definitely looking like a wedge. So you could argue another interpretation is that the market never quite takes out this low. Then we do an ABC, B wave, then we roll over. So ultimately, whichever interpretation you are in, number one, as we go into Q4, there's no point being short this market anymore because it's just too risky. The chances of a vicious bear market rally around Labor Day, in my eyes, are very, very high, especially if Bitcoin has one more big dump to 14.5K. That doesn't mean that it's over. A Q4 midterm rally, all that means is a bear market rally, which the average percentage increase can be anywhere from 15 to about 24%, and it can last a couple of months. But all that means is that we're setting up for an even bigger crash. Frankly, it would be better if the S&P didn't do this nasty ABC thing, like 1929, and just continued going down, take out the pandemic highs, take out 3K, then we end up at 2850, then we materialize out of it, right? But once again, it could take a while if we are following a 1970s fractal. So I'm not saying we're not following the 1970s. There's a lot of, reason, grand super cycle, or whatever you want to call it, and why we should be following this. Because wave 2 was very short and deep and steep, and it only lasted 2 years, and this is more sideways. The point I'm making is, though, how far down do we go? I don't think anyone cares if the S&P goes down. What people care more about is how far does it go down, and that still remains to be seen. In my eyes, I will assess this twice a week, which I am doing. The Q4 rally, that is a big part of this. That will give me an idea of how deep we're going to go. Worst case scenario, we're going to we're going to come all the way back down into here. Basically, we're going to take out the 2007 high. In this scenario, Bitcoin would have to go sub 3K. So there are very, very bearish interpretations here. I don't think that anyone can make the count no longer that the 5 isn't in. I don't think this is cyclical, though. This is definitely secular. Anyway, those are my interpretations. See what you guys think. If you want to join the group, you can do so. And let's see. There's a lot of interesting things happening here with the interest rate, with the dollar pulling back. I just don't think that we're over. If this S&P is finished in its bear market, it would be the shortest bear market in history. There is still the potential this can completely roll over here and bring the price over earnings on the Shiller into single digits, and that is really what I'm expecting here. I don't understand why we're trading at 16 to 19s on the PE ratio. There is very much the possibility that goes below 10, and ultimately none of my 20 leading indicators suggest to me anything bullish going on. I just don't think there's a 1, 2, 3, 4, 5 going on. I just don't think that's the count. This can get a lot worse. Anyway, I'm going to wrap it up there. Good luck in what you're doing.